Hi there, keen traders. Happy New Year's. We're back in the flow. It has been a hectic morning. We had big moves in, I guess it would be European trading. Pretty much everything kind of stalemated in North America. And we'll take a look at what we have as the stacker setups in the Euro, Swiss, and pound, and I was going through and checking all the trades in the euro for the stackers the last year, and the euro USD, and so forth. And the stacker, we have finished the year up 2,500 pips, which isn't that bad. But the last 3 months, it's been kind of, there's nothing. We need direction for that particular setup to work. I mean, last month it was actually minus 124, and the month before, basically, we had that big move in the beginning, but after that, so basically for like the last 7-8 weeks, it's just been just taking pips away. But that's how it works. You have to take some, then you get a bunch. So we're going to go through the stacker setups. Fibs were 50 fib pullback trades were pretty much dead last month, and I'm not probably even going to look at those until another week from now, because that's when liquidity should probably come back. It's lots of traders, I think, had a pretty good year in the beginning of the year with the yen moves, and so they were sitting on the sideline just locking in their profits basically for the entire fourth quarter, and that's what's caused our aggravation. But so let's go through and look at the Euro USD first, and you can see tried to update everything on the blog. It's just I think I have a virus on the main system. I'm trading from home today on my laptop, and it is just causing me such a headache. I'm trying to fix that problem. Anyway, so let's go through the Euro USD. The Euro USD, you can see nice move. This was the move on Friday. I can't tell you how pissed off I was about that. That was just a liquidity crunch. That was a hedge fund basically taking our money. And there's nothing we can do about it. I mean, I guess there was a comment, but it wasn't like anything that nobody knew. And we had a shoot up and then a reverse back. So now we see the pairs in this range between 138.30 and 136.25. We need a break of that range before I'm interested in doing anything. And I'm actually honest on the top side. If we do get that way, I'll probably look for a break of that 138.80 level to really get me interested in jumping in the trade either way. So right here, right now, sidelined on that pair, and that's going to be the same story, obviously, because these trades pretty much replicate themselves. In the USD Swiss franc, you can see this pair moved right up to the resistance level, which let's just say is at 90, and it has stopped, and it can't really find any direction from that point. Let's see if we run a trend line off here. What do we get? Pretty much, let's see if we actually run it all the way back there. I'm not sure if this works whatsoever. No. So you can see that the pair has stopped right there. So I want to see a break of that before I jump into this trade. I know that's not, but just the way the things are consolidating right now, I know that's not 100% how this system works, but heck, the way it's been trading in the slight narrow range, I want confirmation before I get chewed up again. Great Britain USD day broke the range. We'd been watching it bounce around in this really narrow range, and we weren't getting anything done in either direction. It broke higher, but now it's sitting right back at it, and it's below the 164.50 level, which was basically the top of what we were watching. If we get a close of that, we could see a reverse back down lower. We're going to watch this because this could give us a chance to jump into this trade. But to say this pair has been inactive this quarter is an understatement. You can see we just had consolidation. Then we had a nice run right there. But then we're back in consolidation. So we're going to see, could get a bounce higher. We get a house break back above this level. It's a good chance of entry. If we get a continued move down lower, we could break into that to the downside. The Aussie USD. Still waiting on this harmonic trade to set up. Like I've said, we need a push back down towards that 87.50, 86.80 level, let's just say. Not getting there at the moment, and we'll see. We get a push back down there. That'll give us a great chance to jump in. It is interesting that the Euro USD harmonic that everybody was looking at, that was blown out also with that spike higher. And the same thing with that yen trade that we were keeping our eyes on. It has spiked higher, has broken, and now we're looking at this. You can see that this pair had the reversal. It pretty much reversed right at the 0.382 fib at 93.56 after that large move higher. Now it's higher. I mean, if we could see a push logically up to what should be the 1.272, which is at 111, and if we get a push back up to that 111, then we could have that would be a completion of this cycle, and we would definitely could see profit taking at that point. But it's very interesting to see how this pair is breaking out at the moment. So above 1.3 at 103.75, we could favor a push back down, push higher. New Zealand, you can see it's still basically in the same thing. We're in a wedge. We have this trend line, and this 81.60 level is supporting it. So we're just going to watch that. We're going to need a break of either one of those to really get us interested. Like I said, the fib trade's not too compelling at the moment because we don't have the volume that we need. The yen pairs have just continued to push higher, but we're not getting the jerkiness that we need for these pairs to work, for these trades to work at the moment, and we'll just need a little bit. Basically, you need people to be interested in the Fibonacci levels for the Fibonacci levels to work. I know people think it's this God-given level that nature works at. Now, the reason it works is because people are watching the Fibonacci levels. It's a cause effect, chicken and the egg. Whichever one you can see, whichever one is creating the action, and the other is up to debate. The Great Britain odd, you can see above that 183.50 level, so could see move higher, and the Great Britain New Zealand back up to 202.40, and it looks like it's happy above the 197.50 level. So we're going to watch those pairs for opportunities to jump in. So what we're watching for in the short term is Great Britain USD in this range at support. We're going to could see a continued move back down lower. Euro USD, we need a break of this range, and the USD Swiss franc, we're going to watch, see if we get a break of this 90 level. Then it does give us a good chance with a trend break for a continued push higher. And I will try to get all the stacker updates done for the year, have that up on the blog, and we're probably and I'll look for any harmonic setups that we see, but they have been thin lately, just because we haven't had. What's happening is we're only having like retail traders jumping in right now, and we're not having the pros create their positions, and those are the ones that are going to be paying attention to the exact same things we're going to be looking at in those harmonic setups. So if we don't have those traders in there looking for the same setups that we're in, it doesn't work, because you just have people making their decisions at a whim, which is the way that most retail traders do it. All right, everybody, this is it. Everybody have a good one. It's good to be back in the flow. Talk to you guys.